Good morning, this is John Piper with the weekend video clip, and it's Saturday the 23rd of August, and we're looking here at the chart of the Dow. The Dow had this five-wave decline we've been discussing endlessly. We've now got this rally which looks pretty impulsive, starting to make new highs which clearly negate the five waves down. However, there is still a sort of grain of hope, I suppose, concerning the bear case, the grain is this is an ABC, this is a B, and this is some kind of C wave. Now if it's a C wave, then this little bit here is probably part of it, with one more rally still due, but it's looking pretty unlikely. I mean, what we need to see is an opportunity or a sell-off, a signal. We haven't got that yet, so it's a matter of watching to see what happens next. If this were to be an impulsive move, then I guess that would be a 1, this would be a 2, then I have a 1, 2, 3, 4. So again, a bit more upside is due. So if you like, it's a low risk opportunity going long at the moment, and sorry, not at the moment, it's going long when we see a buying opportunity, which is a short-term thing, obviously. Then having seen that, we'd have a possible either ABC or 1, 2, 3. So we'd expect a sell-off here, either as a fourth wave or as this possible decline coming in. Look at the DAX now. As discussed before, the DAX still looks a lot more negative, essentially with an impulsive decline to there, wave count not very clear, and then a corrective rally to there with the 50% retracement here. So the DAX has seen a much weaker rally. Looks a lot more corrective, suggesting that we have got more downside to come here, but again we need to see the sign that that's actually happened or is happening. At the moment we've just got this little blip down here which is neither here nor there, so look at that in a bit more detail. So you can see we have an A, B, C, a sort of flat correction at the moment, so it remains to be seen. I mean, it could of course extend. I mean, that looks less corrective than what we've seen on the Dow, so I mean this could actually move down. We'll have to watch out for that come. I think the DAX open on Monday. FTSE's closed on Monday with a bank holiday. I believe DAX, other European markets and US markets are open on Monday. As I've been saying, it always looked corrective on FTSE. We've now got this decent rally, and again it's a bit of a correction or a sideways drift here. This is the hourly chart. Let's see if we can see the wave count. We could see a 1, 2. Sorry, let me do it again. 1, 2, 1, 2, 3 to there, 4, 5, another 4. Actually, this could be a whole 4 with a fifth wave to come. So again, we could actually see a bit of a blip above 6.8, maybe next week, early next week, and then a move down, perhaps. I think it is time for some kind of correction. Just depends on how that pans out. Look at gold now. Right, gold's been falling back, so it hasn't. The buying spike's been taken out. I've actually drawn another triangle in here. We've got this trend line here. Also got this trend line here. It could be a tale of two triangles almost. And we've got the rally there. Then we've got a 1, 2, clear 3-part, 3 there, 4 there. We've just failed, and this could be a fifth, in fact. So it's possible what we're seeing is ABC1, not terribly encouraging. But then got these 5 waves. So support on the lower trend line here, which is around the 1280 level, is important. If that can hold, then we could finally see a bit of a blip up. Now the problem is that if this is an ABC, the blip up could also be, I mean, it could certainly be a stronger move, could take out this key level around 1430. But whether it's actually going to go into the stratosphere remains to be seen. But there is certainly still a case here for upside. It's just taking its time coming. Obviously, we had quite a long. Well, we started the sideways drift, if you like, around here. Those lows there actually mark the midpoint really. Back in May 2013. So we've had well over a year now of just drifting sideways. But the apex is getting close. So it's got to break out one way. I mean, it just has. It cannot remain in an ever narrowing band, and that narrowing band will eventually become virtually zero. So clearly, a breakout is inevitable. There is a case here that 1280 is going to be a strong support, but we need a buying spike, so something to hang our hat on, as it were, before going long. as I said, I'm still holding long in fact, but I'm small positions as I've been saying in the reports. Right, so pound dollar to finish. This is the hourly chart. We have got a 1, 2, 3 down to there, maybe 4. Gone kind of 1, 2, 3, 4. I mean, it's all a bit unclear, but we're certainly due a bounce at some point. I mean, we just collapsed straight down here. It looks very impulsive, but some kind of snapback rally is due at some point in time. And I think, as I've been saying, I think the pound has peaked, and the dollar is liable to. I think this trend is here to stay for a while. Okay, that's all for this weekend. Hope you found that interesting and useful. Back with the report on Wednesday morning. Have a great weekend. Thanks for listening, and bye for now.